We're having participants. I see the number going up, so let's wait a minute and then we can jump in. We'll give it a minute. 30 more seconds and then we're jumping in. Okay, let's jump in. I hope everyone can hear us well. So thank you so much for joining us today. Generative AI has exploded onto the scene and there's been so much conversation about it. So we're here with some amazing experts from different fields to talk about how are financial institutions really thinking about it in practical terms. What are the challenges to implementation? What kind of compliance issues are best suited to be addressed with generative AI? What kind of controls do you need in order to be able to implement generative AI solutions? We all know that financial institutions are known for being risk averse by nature, right? And finally, what is the regulatory outlook going forward, particularly in light of the new administration coming in? So thank you so much for our esteemed panel. So we have Brendan Mulvey, Senior Managing Director of Truliant. We have Jonas Ing, Head of Digital and FinTech Strategy and Innovation at KeyBank, and Ian Maloney, Head of Policy and Regulatory Affairs for the American FinTech Council. Thank you very much for joining us. I'm Anna Fridman. I'm co-founder of Spring Labs, and I will be your moderator for today. So thank you again to all of the guests and our panelists for joining us today. To set the stage a little bit, maybe Ian, you can start us off with talking about what is the current guidance from regulators on the use of Gen AI in the financial services sector?
Sure. And thanks, Anna, for having me. It's really fun. I love Spring Labs and glad to be here. But really, as it relates to formal guidance or even informal guidance, kind of the whole regulatory structure, it's a bit tricky right now for Gen AI and for really AI overall. There have been, I think starting at the federal level, a lot of the prudential regulators, and so this will be very important for like your bank folks. A lot of the prudential regulators are currently working together to kind of understand the takeaways from the Department of the Treasury's recent request for information on AI and financial services, and then their subsequent report that came out last month on some of the risks associated with AI. And so that's still, any sort of formal guidance or rulemaking, things of that nature, is kind of coming along. However, informally, and this comes mostly from our membership, what we've heard is that informally, examination teams on the ground are engaging with banks and asking, if they're engaged with AI, what their risk management processes are, and kind of going down that path. And so there's a lot of that informal engagement and sort of some guidance, kind of further along in that capacity. Is important also more on the formal side. We've got the National Institute of Standards and Technology, or NIST. They issued their risk management framework generally on AI, and then in July of last year, they had one that was specifically targeted towards generative AI. And so that was something that I think, for financial institutions, even though it's not specifically geared towards financial services, it's more broad than that. They can still take in a lot of good information and kind of develop some of their risk management processes around that. Lastly, at the federal level, I think it's worth highlighting that the CFPB, Consumer Financial Protection Bureau, which has more of an impact on the fintech side, although they do have broad remit for consumer protection issues writ large. They haven't really done much in the AI space since about May of 2022, when they issued an advisory opinion on the application of ECOA to lending decisions and AI, and then the circular on adverse action notifications. So that's kind of been as things stand at the federal level. Now, the state level is another area where folks might be getting a lot of some guidance, and that's been also a sort of a different beast. And so you have a flurry of legislation that's come, last year and this year, but that's more over AI generally, although it does obviously implicate Gen AI, it implicates financial services. And, for example, Colorado passed legislation last year that was very broad in how it was going to view AI uses and what it was going to do as far as enforcement and that. So setting up that regulatory framework. Definitely not without issues, and even the governor and the head of the Senate recognize those issues. And then the California Privacy Protection Agency, I think, is also worth highlighting that they have issued proposed regulations that are relating to what they're deeming automated decision-making technologies, which would include things like generative AI. It includes specifically calls out AI in lending decision making. And so some of those larger use cases that we might see from financial institutions as well as fintech companies, those are being handled more in a formal sense right now at the state level as opposed to the federal level, but we're definitely seeing stuff across the board.
Great, great. Brendan?
Yeah, I was just gonna say, I think certainly the other thing at the state level is interesting, and Texas in the past week introduced basically their version of what looks very similar to kind of the EU AI Act, really focused on governance and includes prohibited systems, high risk systems, so kind of follows a similar flow. And so I think really states are going to be where you're going to see certainly the more immediate formalized statements, whether it's new laws or regulations. But that certainly continues to be an area to kind of watch. And then for anyone that's involved in the insurance industry, another area that's certainly been much greater focus for regulation that relates to AI. I think NAIC has like a model bulletin there's 8 states that have brought forth regulation around, and certainly more to come. So I think anyone that's in or adjacent to the insurance industry, and that gets interesting because some of them focus on broader product remit. Maybe it's P&C versus health versus life insurance, and some are all in, some are partial. So it really creates this real complex patchwork. And so it's kind of have the eyes wide open and head on a swivel as things continue to develop.
Great. Jonas, you mentioned during our prep call, you pointed out the differentiation that regulators might be making between AI in general and generative AI. If you could weigh in a little bit on that.
Yeah. Well, first off, I'll echo Ian's first comment. Thank you for having me. There's a fun conversations. They're scary and daunting, but they're also really exciting and compelling at the same time. And I think Ian actually kind of touched upon this a little bit earlier in terms of that distinction. My first comment would be, you've already heard this in Ian and Brendan's comments, but the pace of change has just been overwhelmingly fast. And so we haven't heard a lot officially from some of our regulators and some of our examiners. They're really, frankly, themselves trying to keep pace with just the amazing speed of development. And oftentimes when we talk to our examiners at the Fed or the OCC or the CFPB, they tend to draw like high-level maxims, right? And those high-level, those axioms are more like, how are you managing risk? How are you ensuring that if your AI or your Gen AI are making decisions for you, how do you ensure that you're following the law, that you're treating the customer well, and so on? But the distinction between, say, AI and generative AI has been kind of an interesting evolutionary leap. I think 2-3 years ago, the whole industry was really just trying to grapple with the basics of AI governance and risk management. What does your model risk management look like? What are your risks and controls? What is your oversight? What is the diligence that you need to do? But at the time, I think, this is maybe being overly reductive, but AI was just hyper fast modeling. And so a lot of that was still fundamentally predicated on some basics. Your model risk management, how you're going to govern your models, and so on. The generative AI, especially with the GPT model upgrades that have happened in the last 2 years, have really, I hate using this language, but it's completely scared the bejesus out of a lot of us, because it is crazy how these capabilities have really evolved. It's not just taking an inefficient process and making it that much faster, or taking your models and refreshing them 2,500 times a day. It is now simplifying, summarizing, generating content, and spitting out that content to the user in ways that we had never really fathomed before. In fact, I'll give you a quick anecdotal example. A speaker that I had heard about a year ago was talking about a pilot in the medical field. And the long story short, I'll be really quick about it, was that the AI was tested against doctors. The AI turned out to be faster, that's no surprise, tended to be more accurate, which is also not that surprising. But the generative AI turned out to feel more human than the actual human doctors. And that is an example that I throw out to a lot of people. That's what scares me sometimes when I think about Skynet and Terminator and killing us all. This is where generative AI has gone. It is getting more human than the humans. That's where the distinction between that AI and generative is. That's where it's not that the examiners or regulators are actually saying that, and that they're drawing that clear of a distinction, but that's where the whole series of questions that they're asking has completely changed.
So, Anna, just to build on Jonas's point, I think that hospital example is really interesting, because my first thought was, oh, the bedside manner. That's where we're going to see a difference, and then to not see that is really concerning. But I think that, going back to NIST's risk management framework that's specifically geared towards Gen AI, in there they discuss how Gen AI can potentially have unique or exacerbated risks, or, and sort of what actions should be selected. And so things like bias, or, the development of harmful content, like that's what they chose to focus on. And there's definitely, I think, an important distinction that's not necessarily being held currently at the regulators, because they're still getting their minds around it. I mean, OPM has a circular out for, the responsible use within a government context of AI just generally. And so, the technology is moving very quickly, but, some of that, I think, reliance on NIST's work, because they're typically out in front. They're very scientific. They're not regulators, never have been, and probably never will be. And I think it's important, though, to keep an eye on what those agencies that we don't necessarily normally think of as good benchmarks.
Great. Great. Also, one thing I forgot to mention, as we're talking, if anybody has a question come up, please use the button Q&A on the bottom, so we'll answer the questions at the end. So thank you so much for answering that. So in light of that regulatory backdrop that we just talked about, how do financial institutions think about making the business case for going ahead with Gen AI, right? Like, what is the process of ascertaining whether it's worth it, okay, to use it for a specific purpose? Brandon, if you wanna.
Yeah, happy to start. I think certainly, a couple of things that kind of came up, and kind of Jonas, certainly you were saying that resonate with where this is a challenge is, given sort of this current state where kind of existing standard, existing guidance, generative AI really doesn't fit under kind of the traditional definition of a model, and so therefore but it looks sort of similar in terms of some of the risks and how you might think about managing them at the macro level. And so what you see is, and they'll kind of get into how do you make the case, is model risk management, model governance is not a business function, right? It's a risk management function and risk mitigation function. When you look at Gen AI, the most critical thing to start with is really what's the business case? What are we trying to solve? How is Gen AI positioned to solve for that? How is it going to improve upon or otherwise realize some value? And how does that compare to today? And certainly on the other side, what risks might be presented that may be new? How may it mitigate certain existing risks? May it magnify certain existing risks? And then ultimately, how do we make an informed decision? So really have to operate on kind of those two vectors really kind of concurrently. And one of the challenging things, particularly on kind of the business side of that, is if you can't effectively, going back to kind of the doctor example, right? Like, how do you baseline where you are today? If you're not effectively able to demonstrate, uh, throughput or quality or effectiveness, timing, costs in an absolute manner, the harder it's going to become to make a business case to make a change. If I can't really tell you what something costs today, what the risks really are, what problems have actually been presented, or what costs I might avoid in the future, it really just becomes all the harder to make a business case. And I think particularly in conversations we've had with clients and work we've done, where they've had some difficult conversations with regulators or other internal stakeholders that maybe haven't been on board, uh, being able to baseline against something to say, hey, we can achieve X% improvement over where we are today is a very different conversation than we have a model that can achieve 90% accuracy. Say, well, 90 is not good enough. It should be 95. But if I'm at 85% today with my current process, 5% improvement sounds pretty good. And so I think that's the part to me that becomes really is probably the hardest thing within that. But ultimately, it's being able to articulate value, really understanding cost over time, having a proper time horizon. When do we expect ROI? What does that look like? How do we account for certain business changes? And then certainly as these technologies continue to evolve, the cost structures are going to change. Certain things going on recently, maybe things get cheaper in certain respects or otherwise. And all of that sort of has to factor into your thinking as well.
Thank you, Brendan. Any thoughts, Jonas?
No, I think Brendan, what Brendan commented on it's very, very well said. And we have the same challenge, right? If you're thinking about effectively mitigating risk, right? That's really what a lot of the examiners and regulators are asking us. How are you going to manage your risk? But I think as Brendan is alluding to, there is just a very, very large series of X factors when it comes to the size or magnitude of risk when it comes to generative. We really just don't know. So if the question is, how do organizations evaluate a business case and an ROI, you have to discount pretty heavily the like in terms of the possible impact to your organization and the risk that could be. Put it another way, the hurdle is pretty damn high, right? It has to be supremely worth it for you to take on that risk. But I mean, I'll say this, Anna. One of the things that we're trying to kind of put in place is trying to kind of bucket the ways that we assess that risk, right? And looking at all three of these buckets in terms of total cost of ownership or total cost of risk management, if you will. That I'll kind of do it in reverse order. That last bucket, when something is in production, what is the cost to you of managing, monitoring, governing, and controlling that risk on an ongoing basis? What would it take to oversee? Do you have I call it a break the glass kill switch? If your AI is running amok, it looks like it's going to kill us all, what do you have to kind of break the glass and turn it off? There's a second bucket, which in order to determine what you are willing to take that chance on, what is the diligence that you're process that you're taking? Who has the authorization? What are you going to examine in terms of approving and green lighting a particular initiative? And then all the way upstream of all of those aspects is how do you evaluate the opportunity in the first place? And it's good if those three buckets are largely working in coordination with each other. But at the end of the day, the way to have the right defense in front of an examiner is to be able to tell that regulator, this is what we are doing to manage the risk. Here's what we're doing in production. Here's the diligence effort. And here's how we are not even bothering to entertain any number of opportunities that come our way. If you're doing those things, it is frankly the same tried and true way that we approach all of our examinations. What is your defensibility? What is your explainability for how you're mitigating and managing that risk?
Great. Thank you. Ian, any additional thoughts?
I think this is the beauty of having two folks that are really on the business side of things. They covered so much and so much so well.
Yeah.
I really don't have a ton to say just across the
Mhm.
industry. I know one thing that we've heard a lot and we really preach, across our advocacy work is that it's important to, never get out in front of your regulator, but instead to get in front of your regulator. So if you're engaging in, or even contemplating engaging in some sort of AI or specifically generative AI, you want to have those conversations early. Think about off-cycle conversations and really, going to the extent that there's office hours, at the state or the federal level, really engaging with those regulators because it's going to take a lot for them to become, not just now. I think knowledgeable would be the highest, but even just comfortable with that something can be done here and they're not going to just throw cold water on it. And that takes a lot of trust building throughout the process. And that's not just when they knock on your door, but to actually go out and knock on their door first.
No, makes sense. Makes sense. And it just kind of following that line of being ready and thinking about how the regulators are going to think about it. What are the types of controls that you would say like risk management processes? Like if you can delve into some details, what are the kind of things that make financial institutions more comfortable with the utilization of Gen AI?
Yeah, I'd say it certainly starts with strong governance, having the right process. And again, it isn't necessarily just a redux or a replication of kind of model risk management. In some cases, looks a little bit like that to a degree, but it's how do you capture some of this, really the kind of the front end and sort of throughout sort of the business process. There's a lot of particularly larger organizations that we work with that have immense backlogs of ideas, things they want to pilot. How do you prioritize? How do you go about, even within that context, defining value or what you're trying to solve for, or what the risk might be, without maybe boiling the ocean for just trying to put something in a test environment and see, or in a small sample, try something out. So certainly that sort of governance process, which a lot of organizations to this point still appears as like kind of working groups or committees with the right stakeholders from risk and compliance, have your audit folks engage, your legal folks engage, obviously your business stakeholders, to your technology org, certainly, and anyone else who needs to have a seat at the table in order to have informed conversations. And certainly within that, as part of kind of getting back to some of the business case and other things, are we setting out measurable goals of what we expect, not just from business success, but from the risk side? What are the risks we worry about? What is the relative risk of hallucination or bias or drift? Are the particular other regulatory requirements we're worried about? To your point, right, CFPB has talked about things like around appraisals and recently around dispute resolution. And so how do you think about these things and as they apply or the context of it? And then ultimately, how do we measure? If we're expecting certain outcomes from business side, are we actually seeing that? And then you think about the other impacts on other risk programs, certainly around risk appetite, certainly kind of Jonas, as you noted, around resource impacts, training. Are we upskilling and training our people enough to even just understand, and maybe to your point, maybe not understand, but just be comfortable enough with? And how much does that factor into our training programs and plans, or how we're hiring, or what our talent needs might be in the near to medium term? And so it's kind of on its own a process in terms of how you govern and manage AI. Then obviously as you're deploying it, looking and how you monitor for all these things and then mitigate. But then it's also, where does this bleed into other processes and other risk management routines?
Brendan, I'll piggyback on a comment that you just made, a little bit of an offhanded kind of joke, but a number of these panels that I've been on will oftentimes comment that the advent of Gen AI is going to create careers and job paths that aren't even imagined right now. They don't exist today, even in the wildest of our dreams. So you want to talk about ongoing training impact and having people just be able to understand, some of the things that are coming. Our kids are going to have jobs that we don't even know what they mean if you frame them in today's context. When people talk to me, about explainability and needing like advanced Shapley models, like that's when I have no idea what the heck you're talking about. Imagine what it's going to be like for our kids.
Yeah.
Oh, wow.
Yeah, I'll just add briefly that in addition, you've got a number of different ways that AI can kind of come into an organization. It can be kind of internally grown, but also, a lot of companies, a lot of banks are going to be looking to partner. And so then, it's not just the AI risk management that you have to think about. It's also that third party model risk management. And then if your third party is pulling in some AI, then, you as the financial institution have nth party risk. And so you have to engage with that as well under the current regulatory regime. And that's no picnic. So there's definitely, kind of to Brendan's point around, where does AI bleed into other risk management procedures or practices, that really comes in when you're thinking about bringing in a new entity or partnering in some capacity. And really, it has to be, in our understanding, really a focus on, even in the onboarding and continued monitoring processes, you have to make sure that the partners are fitting together and that there's good fit kind of across the board, because the last thing you want is to have to terminate some sort of core process that's tied to, AI, or face, enforcement actions because of it.
Yeah.
Makes sense.
I would
And
just add,
Jonas,
yeah,
so go ahead.
I was gonna
Yeah,
say,
Brendan.
just kind of add to, certainly like on the third party risk side, we've seen, worked with a lot of clients on, how do you care for identifying that risk the right way? And so there's two aspects, right? There's certainly are we engaging with a third party to either build or provide AI to our organization or underlying capabilities? There's also do I have a third party call center that's using Gen AI, and then how we manage that? So are we asking the right questions with the right context? Because that's ultimately going to drive level of risk and then what we expect from due diligence, contracts, monitoring. And so are we collecting that right information? And kind of, Jonas, to your point, an earlier point, it's going to continue to evolve, right? As new use cases emerge, as the industry evolves, as technology advances, adoption increases, all that's going to inform what the questions do we need to be asking, how do we have to evaluate those risks, and how do we best manage them. Um, so that's also really certainly important.
And Jonas, you mentioned a little bit of like how are our kids going to think about this and things like that. But so I wanted to touch a little bit on sort of the human in the loop concept and put that together with concerns that people have with respect to like what is the amount of human capital that will no longer be needed? Will AI replace us and things like that? So how do you think about like human resources side going forward?
Well, you're definitely asking about a few things there,
Yeah.
right? So
Yeah.
the first thing is in terms of the human in the loop. Some of your questions, Anna, have been about what are our examiners and regulators kind of offering in terms of guidance. And I think Brendan and Ian would certainly attest to this as well. Most of what we're hearing is that if your AI or your Gen AI is involved with a decision of some sort, you better damn well be sure that it's following all statutory requirements and guidelines, all of the bulletins and so on. And if you're going to go down that route, then really the only way that you can know for sure, at least at this stage, is to have that human in the loop, right? Where I don't think the industry is ready to have a fully empowered and enabled AI or Gen AI making decisions or presenting information to the customer without at least that kind of human double check, at least at this stage of the game. However, we are also alluding to the fact that the opportunity around AI and Gen AI is exponential growth and exponential learning. The sheer amount of power, compute power, and the ability to factor in millions of factors into some of these models is what will allow these AI and Gen AI brains, if you will, to learn exponentially quickly. So it will get to the point where it will become highly trustworthy. In fact, I would probably say, you've got three folks that are seeing this from different lenses. We're already starting to see where AI and Gen AI is getting faster, more accurate, more predictive, more consistent, and actually sometimes more compliant than the human beings that we have doing these jobs today. And that delta is only going to continue to grow. But the last thing that you're touching upon, Anna, is a highly, highly touchy subject. Is this just going to replace all of us? Is this going to eliminate all of our jobs? I mean, for the folks in your audience, the three of us, let's admit a couple things. It is eliminating jobs as we speak. Things that were relatively rote, things that were relatively routine, those are getting replaced right now. I was just talking with a friend of mine who was a compliance officer at a BPO firm doing contact center things. AI is replacing things that they used to have paralegals doing all the time, monitoring contracts, monitoring calls, for example, monitoring complaints. There are AI tools that are displacing human beings that were doing those jobs up to this point. I think the optimist in me would say that, like with the transformational change that we've seen in technology for basically since the dawn of time, you have to just figure out how to adapt. Those old jobs are going to be eliminated. There are going to be a whole slew of new jobs that will come up in its place. So, for example, I was on a panel maybe 2 years ago, and we were jokingly talking about how creating a prompt for your AI engine, there's a lot of interesting iteration and things like Chat GPT. They remember your history of prompting. I was like, I could see this being a job. Like I'm gonna have an analyst just trying to figure out how to re-prompt the Chat GPT and get the answer that I actually really want. Lo and behold, 2 years later, that is a discipline being taught in universities now. Prompt engineering. The heck is that? I have no idea what that was 2 years ago. Now I think it makes a whole lot of sense. So I guess my point there, Anna, would be it is going to displace a lot of people that were doing jobs that were relatively routine, relatively automatable, but that's been happening since the Industrial Revolution, right? So you just have to figure out how to adapt, and you have to figure out what new jobs you're going to try and take in as your old one starts to get displaced. Or like me, I'm going to retire as soon as humanly possible.
Yeah. I'd say the other thing too certainly is, yeah, it's something I said at a panel last week. Everything we're seeing from kind of use cases and exploration are largely based on things we do today and the ways we do them today. There's going to come a point, and maybe it's already happening in some lab somewhere, or some classroom somewhere, or maybe in the walls of KeyBank or somewhere else, where someone's taking a whole new look at, just a new problem, or just taking a whiteboard and just saying, how might I achieve X? This is how we do that today. Totally reinvent the experience, right? And so there's a lot of certainly interesting potential there. Yeah, the simple reality is certainly there's going to be impact on certain jobs. New jobs will be created. I think we're in the stage now where a lot of the focus is on sort of those current state activities, which naturally is going to focus on where can I reduce cost, where can I get incremental value, and if you're particularly focused on the cost side, is inevitably and invariably at some point, initially maybe it frees up some capacity, call wait times go down. I still need the resources in the contact center, but at some point those wait times get to a point where I can survive with a 3-minute wait time and cut X number of resources, right? So there's this give and take, but I think we're still in the stage where certainly a lot of the focus is going to be on things that are more likely going to translate to potential risk of, if you want to call it that, resource reduction. But I think ultimately it's going to be getting more into much more interesting, novel things around value creation and just kind of new ways of operating. It's even get jobs we can't even fathom right now. Can't even. It's gonna be wild.
And just I think there's a lot of, I mean, I don't mean to take a sort of a contrarian approach, and definitely not. I think that Jonas and Brendan are quite right. There will be new jobs, but there will still be the need for some of the traditional jobs that we see now. And so I think about on the compliance side, there's I go back to Hannah Fry's book, Hello World, where you're thinking about what the role of the human in the loop is and who's kind of auditing the auditors and thinking about that. And there's always going to be, from the regulators' perspective, that need to kind of, as I discussed before, around trust. And they have to trust the process, and they also have to trust the people that are engaging in that process. And so there's more of a focus that I've seen around augmenting the work that's being done by a financial institution, by a fintech, by any number of companies through the use of AI, rather than sort of replacing those individuals. And that's especially true on the compliance side, because ultimately you have folks that rightly so, I think, have, a naturally skeptical nature. They're coming in, they're thinking about things in a very critical manner. And so they're the ones that are going to at times be seen as a wet blanket, and maybe that's what I'm being seen as now, but will be sort of that pulling force back to, sort of, I guess, a more traditional understanding of where AI is going, rather than just allowing it to run free and gallop further than they can handle.
Right. That sounds good. I guess then just to shift back a little bit into specific use cases, what do you think about where we are with the point of where we are right now? What do you think are sort of the best cases or the good cases for things that would close some of the compliance gaps that are out there, or just in general good use cases in financial services?
I think there's plenty for sure. Yeah, when you certainly look at kind of compliance gaps or focus areas, certainly around things like complaints management, dispute resolution, and really any other sort of high volume, higher risk activities that you would expect to be subject to robust monitoring, testing, and oversight. So things where today you might be doing sample-based reviews, well, now you can do full population analysis, or where you're relying on a frontline call center rep or someone on your compliance team to say, oh, this sounds like a UDAP violation, this sounds like this, or I think it touches this product, where Gen AI can really do the right labeling, do it consistently, in a way that yields more value, more reliable output and reporting. There's a lot of value you can drive from having the right metadata and what insights that may arrive at. Also seen certainly value around things like regulatory change management and things like risk and control mapping. Some cool things we've seen in companies we've worked with that are it's pretty cool capabilities around that are certainly enhancing, again, still at the human in the loop to some degree to kind of validate and work with. And then you look at things like GRCs that you've seen a lot of interesting developments there in terms of prompting folks. You enter an issue into a system and says, well, you didn't describe the root cause, or hey, you're saying this is a technology risk issue. It's probably a compliance risk issue. And again, if you have the right data and the right technology, now I'm getting more accurate outcomes. That's going to drive workflow. It's going to drive reporting. It drive other routines. And so there's certainly areas there, and certainly around audit and testing as well. This is processes, and where you just think of report generation. Again, not so making the decision that something's a finding or not, but really supporting it. That's really kind of where a lot of these things are now. It's give me the support based on this, that I feel like this is a high risk issue. Draft what the context is, or pull from these sources, and you're also then coupling other things potentially with RPA or other capabilities. But contract analysis is the other one to me, which is really interesting. If you're a bank or a fintech, anybody, you have maybe a preferred template that you use, preferred language, and quickly be able to compare and sort of contrast, or summarize certain things, or connect that to third-party risk management. We think we're managing against the sharing of PII. Contract prohibits it. Well, what's the answer? Is our contract wrong, or are we a set of monitoring for a risk that really isn't actually in place? So there's a whole certainly litany of interesting use cases. I think, again, given the costs and otherwise, and there's different providers, different things to manage these. Certainly anything that has some volume or scale becomes really important. And it doesn't have to be tremendous. Like, you don't need to be a mega bank with 50,000 complaints a month in order to benefit from Gen AI. Far from it. But certainly if you got 5 complaints a month, the relative value is certainly going to be very different.
So I think for this area, it's I'll counter my previous pessimism with a lot of optimism on the supervisory tech side. So like I think there's so many great opportunities for government to actually start to use AI writ large, but specifically generative AI more heavily in their regulatory activities as it relates to things like BSA reporting, whether it's SAR reporting, I mean,
Yep.
or any other type of reporting in that capacity. It feels like screaming into the void for a lot of folks, I know. And so if you have, if you think about from the regulator's perspective, they're receiving all of this information and they're just trying to parse through it as individuals. I mean, that's a perfect use case when you think about the nuance that is associated with those reports and, with consumer complaints as well, kind of like Brendan was saying, and then in turn, hopefully, this is again my optimism, is making this actionable for the regulated entities. I mean, you've got, 4,000, almost 5,000 community banks out there. You've got some very large financial institutions that have complex operations, very complex operations, and then the whole panoply of non-bank entities. So there's no shortage of a lack of standardization that I'm sure regulators see. And so being able to take in that information, make it digestible, and actually then in turn make it actionable to the regulated entities can be really impactful and powerful. So I'm very optimistic that like Gen AI can really help sort out some key issues within the supervisory space.
I like
Yeah,
the
I think
optimism.
yeah, I mean, another interesting example there, like look at on the mortgage side, appraisal bias was a big issue of the past few years. Fannie Mae does its screening using keywords for prohibited language and otherwise. Gen AI could certainly do a much better job, right? There's certain, if you're missing certain keywords or otherwise, and so you think of some of these things as well, and certainly that's where the banks are looking at that on the front end, but from a sort of pseudo supervisory posture, how you might leverage it. And certainly the SAR narrative is certainly something we've seen clients start to look at, particularly where there's volume, summarizing cases or investigations, anything where there's going to be some corpus of a common approach, process, common data sources and things that you're summarizing or you're looking to summarize. Just a lot of potential value for sure.
Yeah, I'll completely echo Ian and Brendan's comments. I think they're spot on. The way I look at it is like the low-hanging fruit right now is like what they're both talking about, the worlds of like productivity and the worlds of process. That's actually where I think a lot of banks have already begun to start. We have a process that's mostly human driven, it's time consuming. We can probably apply AI and Gen AI to just make it faster, more accurate, better quality, and so on. Or productivity. We have human beings doing X widgets per hour. We think we can get that to Y widgets per hour, right? I mean, just make the human being better at their role, right? So kind of like an AI assisted human being. The where the world's going to start to go is where we can really use the AI help. I'll quote my boss. He was telling an anecdotal story about how like this industry, we're required to always test scenarios, right? We're always trying to like test for worst case scenarios. But my boss would actually say, we never actually really look at the true worst case scenario, right? The worst case scenario could have happened, 18 years ago during the Great Recession and the financial crisis. Like people did not really contemplate that happening. And so where I think AI and Gen AI starts to really be able to take in and factor in gigantic modeling capabilities to truly understand where your stresses are actually going to be. So Ian, a little bit to what you're talking about, I think regulators should start to employ some of those tools to really figure out what is the actual risk of catastrophe, right? For whatever you're kind of looking at. But to me, the holy grail for where I think the world is going to go is where I think that the industry is already trying to get to a point where the business of banking, the business of managing your money is really about hyper personalization. What is your situation? What is your particular identity? What is your history? What is your financial kind of background and so on at an individualized level? 20 years ago, it was a dream of ours in the banking industry to be able to do that, but it's just very, very difficult to build. And it's very expensive to build. But with AI and Gen AI kind of going where they're going, it's about treating down to the individual level. What is the problem to be solved for? What is the individual customer situation and so on? And I'm talking about everything from wealth planning to getting a loan to, are you Ian Maloney or are you not Ian Maloney, right? And it's kind of crazy because if we don't try to keep pace, I guarantee you right now, like in that last scenario around fraud and ID verification, account takeover, identity theft, the fraudsters are using AI. They're using it very, very successfully. It's mind-blowing how well they can deep fake, say, a Brendan, or an Ian, and trick everybody around them. And so the world will get to the point where like we'll probably need to use AI tools to get down to an individual level of verification, and in cases to combat the fact that they're using AI in their side, right? The perpetrators are using AI against us. So it's almost it sounds kind of weird, but the saying we have to use AI to combat the AI.
Makes sense.
Yeah.
Makes sense. And oh, sorry, Brendan, did you want to say something?
No, just completely
Yeah.
agree. I think that's certainly, particularly on the fraud side, you have to look, how do you view Gen AI as potentially a defensive tool versus simply you know, a tool of those looking to defraud, for sure. Yeah.
So when you think about all of the different tools, how do you think about sort of trying to build it in-house, or how do businesses, financial institutions think about trying to build it in-house versus hiring a third party to do it?
Maybe I'll start. This is obviously more of an academic kind of conversation. I'll start with one basic dichotomy. So while we are trying to be very progressive, we're trying to make sure that we think Gen AI and AI are going to be game changers. So we're trying to keep pace with innovation, trying to stay with the latest advancements. But at the end of the day, we're a super regional bank, right? And the one contrast that I'll use to answer your question, Anna, is data. The AI, the Gen AI, generally speaking, up until I'll touch back on this, but generally speaking, the AI was only going to be as powerful as the data driving some of the model learning. And we were always going to have a handicap in that we will never going to have as much data as some of the trillionaire banks. Or doing it in-house versus with a third party, a SaaS provider, they're always going to have geometrically more data than we would have, because they're doing this for hundreds of banks, hundreds, if not thousands of banks and credit unions. They will always have that much more data to be able to train their models. And so that's always been a challenge, right? The balance between control and having protection, using our own data and not releasing it outside our walls, developing our own proprietary LLMs is always preferred. But you're always going to be a little bit at that handicap, because it can never be as powerful as the guy doing this for 1,000 banks out there. Now, maybe I shouldn't open up this can of worms, but the news revelation that just came out 48 hours ago with DeepSeek may or may not change that game. Because what I think that DeepSeek, the reason why I think it caused such a ripple in the markets was because they were able to train their proprietary transistors, right, a hell of a lot faster than some of the previous attempts, like by OpenAI and GPT 3.5 and 4.0. If OpenAI took, I don't know, $400 million to do it, my understanding is that DeepSeek did it in like $5 million. So that may or may not be a game changer in how quickly these large models, these language models, these video models, and so on are training themselves. But that's kind of like one of our biggest challenges. Prefer to do it in-house because you have that control, that risk management. But is your AI or your Gen AI never really going to be as powerful as when you're using a third party?
Yeah, I think there's huge value, Jonas. You mentioned it, like there's this inherent value from a third party perspective of not only from the data side, but just the feedback loop, right? They're going out and selling this to other institutions. They're getting feedback, needs, features that are preferred, not preferred. And so there's this inherent kind of build up. And the other side from the third party perspective, and I think Jonas, you hit on this earlier from like the resource considerations with Gen AI, is you may look to do something proprietary, but are using third parties to support you in doing that. And that becomes another consideration. How much in-house control do you want to have, or expertise to mean your routine on staff to oversee and or manage certain implementations or certain use cases or otherwise, I think becomes a real consideration. I think at some degrees it comes down to certainly on the cost side as well. There's enterprise grade solutions that carry their own costs. To your point, Jonas, certainly like with DeepSeek, we'll see how that changes kind of thinking on over time on pricing or effort or computing power, all these things that factor into kind of the barrier to entry that may exist for certain applications today. And then there's certainly other providers that are much more focused on targeted solutions, targeted answers, like our friends at Spring Labs, who certainly there's probably a bit of a different price point potentially in some way, right? So I think also kind of part of the considerations, ultimately though, I think kind of go back, Ian, you highlighted this, like how you think about this and impacts on third-party risk. And again, it all becomes part of this broader strategy. So again, like how you govern AI, how you think about it, there's multiple points of entry, there's multiple points of consideration, and where and how it may impact. It's everything from resourcing to training, third party, model risk, new product or new initiative type governance processes, key risk indicators, finance. It's everywhere. So it's not just where you're using it, but all the processes that are impacted in some way, or how it creates new considerations or new concerns, or otherwise needs to be factored in. It really is everything.
I kind of go back to the point around how many different community banks there are, and just the sheer number of them. And there's community banks are at varying levels of sophistication as it relates to technology. They're at varying levels of understanding, and some of it it's not part of their fabric. So the consideration of, do you build it in house or do you go out externally? To build it in-house, I mean, that takes, as we've heard, a lot of effort. And so you really want to make sure that that's part of your fabric, that's part of your overall strategy, and that you're not just a kind of a tourist here, you're here to live. And then if you're not, and also even if you're reacting to a specific issue that you're seeing develop and you think that something off the shelf can be helpful, yes, it costs something, but you're able to really assess what makes the most sense for a given financial institution based on where you're at in your understanding. Because the worst thing that we could see is folks that are trying to dip a toe and end up falling in the water, and then they're just not prepared for all of the costs or the risks and sort of the examinations that, as we've discussed, that kind of come along with that engagement in AI.
Makes sense. Makes sense. And I didn't realize we've been having such rich conversation. I didn't realize we're kind of running out of time, but I wanted to close the loop by talking about your predictions, right? Where do you think we're going to stand on AI in, let's say, 2 to 3 years, from regulatory outlook to maybe just in general?
So I'm happy to kick this off. Yeah. I think it's interesting because, and I saw actually in the chat, somebody had voiced a question around, the recent revocation of AI policies from the executive level, rescinding of executive orders. Like, some of that's just political, because I think there's a real understanding both at the federal and the state level within governments that AI is here and it's here to stay. And so they have to understand it, they have to tussle with it, but ultimately, your regulators are never going to be blind to AI and not think about it on a fairly regular basis. And it's just a matter of the pervasiveness with which the agency, the individuals at the agency, start to understand and think about it. Is it your policy folks? Is it your examiner folks? Who is it at the agency specifically? And so, my prediction on that end is that I think, you're going to see regulators kind of moving at different levels, different sort of cases of understanding. You've got OCC that has the Office of Financial Technology. You've got the Fed that has Novel Activity Supervision Program. And that's already a regulatory infrastructure that can really help push that conversation kind of across the agencies. FDIC, the recently designated acting chairman, Travis Hill, voiced a pretty strong opinion, and has, as vice chair, that the agency really needs to re-engage in their view of technologies such as AI and sort of innovation writ large. And so I think you're going to see some changes there in the next few years as well, potentially reconstituting their FDI tech office and seeing what that looks like. And then, at the state level, you're probably going to see, as kind of we mentioned before, that some states are gonna rush to engage and at times over-regulate and over-prescribe what's allowable or what's done. So there's going to be a lot of activity there. I mean, that's not surprising, just, thinking about how policymakers and regulators think about emerging technologies writ large. But, ultimately, it's going to be sort of here to stay, and there's going to be, whether it's the Trump administration or subsequent administrations, they're going to be continuing to engage with this issue in a pretty fulsome manner.
Yeah, I would say certainly it's going to continue to be net favorable in as much as I wouldn't expect anything substantive in terms of direct guidance or regulation at the federal level around Gen AI, which you can view as good or bad. And of certain organizations we've worked with, they're like, just want to know just tell me black and white, like what's allowed, what's not, right? And so there's a bit of a, how do you view that as good or bad? I view it as good. I think innovation is good, and I think it's trying to legislate an evolving set of technologies and capabilities. You're going to be behind. I think certainly states are continuing to Ian's point, be very active, just as we've seen with privacy regulation in the U.S. Just as you saw with open banking for years. Follow the EU. Like they just took them to a year and a half ago to get the EU AI Act passed, to be implemented in regulation. You took PSD2 or GDPR as an example, or if you look at PSD2 with respect to kind of open banking, about a decade behind. So it just and that was different administrations and otherwise. So it certainly, I don't think we're going to get good, clear answers, but I think the desire to innovate, I still think for the supervisory side will remain interesting, subject to how many folks take buyouts or otherwise to leave their jobs and what that may mean. Particularly some of the hiring they did, a lot of it, Ian Wright, was focused on kind of upskilling on technology and other things. And so how does that play out over the next number of months, and how does that impact or disrupt our colleagues at banks that are dealing with regulators and trying to bring them along on a journey will be another area that just have to continue to kind of watch and see how that unfolds and what impacts it may present or not.
That's
I
closing thoughts.
I think Ian and Brendan are by far the superior experts in this regard. The only prediction I could make 10 years ago was that any predictions I made were going to be wrong. And so I think Ian and Brendan are closer to this to have a sense as to where the tea leaves are like. The only other thing I'll throw out there, which Brendan and Ian both touched upon, is the X factor at this point, at least right now, is the administration, right? And what they're going to do to the various regulatory bodies. I think that is introducing another series of X factors. But my crystal ball has been way the heck off for years now. So no predictions from me.
That makes sense too. Well, thank you so much. I feel I'm incredibly sorry that we've gone so long that I didn't get to some of the questions. We'll definitely take them down, and we'll make sure to email back the participants that asked the questions, so we'll get the best answer for you. So thank you for joining us. I hope you found this to be a useful discussion. We certainly did. And look forward to doing this again and seeing everybody in the future. Thank you very much. Thanks everyone for your time.